All right, let's jump into it. Where are we at? It is 10:30 on 22nd of May. So almost coming into this last trading week of May. Jesus, months are sort of flying along. Have a quick look at the sort of news overnight. There wasn't a great deal sort of happening in that. It's been overall, apart from sort of RBA earlier this week, which Aussie completely undid the move of within 24 hours. It's been pretty light on the news and that. Sort of one of note yesterday afternoon was obviously UK CPI, which they were expecting a bit of a bump up, but as you can see, it really sort of outperformed. I don't know if you want to say it's outperformed, but it came in a lot hotter than they sort of thought. So this is actually, as I said, quite a big jump, almost a percent up year on year. And pound took off for it. It was pretty short-lived, but the initial reaction was as expected. Even though they were expecting a bit of a sort of hot print, it came in a little bit stronger, and yeah, so pound definitely sort of caught a bid there quickly. I don't think it held on to it too much. As I said, I don't trade the pound, but of course, it's always worth sort of noting how these other sort of larger sort of G10 currencies are sort of going to be are sort of acting and reacting to things. But as you can see, through the rest of Europe and even through US, there wasn't really much going on at all. We had a little bit of Aussie data up this morning with the PMIs and that, but PMIs don't really tend to sort of move Aussie that much. I mean, you get a little bit with the euro. I actually find the French PMIs generally sort of get a bit of a move, and then you'll get, because they're 15 minutes apart with the German ones, and then of course later on, half an hour after that, you have the whole sort of Eurozone ones. I'll see I actually find the French ones actually move things a little bit, and then the German ones will generally sort of bring those moves back. So I'll cover these ones tomorrow, particularly with the euro and that, just to sort of see how these things have played out, because it's just something that I've noticed with it all, and it's quite interesting. Um, and provides interesting's fine, providing small little trade opportunities. That's what we care about. But yeah, moving through the rest of the day, it's pretty much PMI Thursday here. So we got Eurozone and that again. Look, these are the things. 50 is the benchmark. For most of it, we seem to be sort of coming in under 50. I mean, the whole sort of Eurozone services is about the only one here that was sort of seeing to look like any sort of expansion, 50 being the baseline. So we're sort of looking, look, it's all expected to tick up a little bit, tick up a little bit, tick up a little bit. So moving in the right direction, but again, if it's sub 50 in that, it's in contraction, it's not expansion. So you want to see for these kind of euro strength kind of things, at least, I mean, any of these currencies, above 50 to sort of show some actual production and some actual strength there. Services. So services seem to be the one that's sort of outperforming, at least with German and UK. Again at 50 there, but short of that, again, Asia, nothing. Euro, kind of nothing. Pretty quiet in that. US PMIs, I think, are going to be sort of people, excuse me, paying a little bit closer attention to. US dollar is on its knees at the moment, and it really needs some sort of strong positive data to sort of get basically starve off being blown out. So I'll get to the charts with DXY in a moment. But again, services out sort of performing manufacturing, or supposedly looking like it will be. Actually, it's looking like a little bit of a slowdown in manufacturing, and then obviously a very slight sort of tick up in services. Well, the manufacturing, the thing is that you're not turning over overnight in that, but the whole idea of getting all the sort of production and everything back to America, yeah, I mean, it's not going to happen. You can't set up a factory in 2 months. Maybe in China you could. I saw something the other day actually, and I think they broke the record for a 10-story building. I didn't even know there was a record. So some of these things are sort of like they create a record and just so they can then sort of claim it and break it. But they put up a 10-story building in under 24 hours, I think it was. So some ridiculous amount like this. So anyway, whatever. So moving on, apart from that, existing home sales, not really sort of major, but look, I know small these things here, they're not sort of like major bits of data, but they're little bits that you can sort of plug in to sort of see how things are going. Slight tick up in that existing home sales. And short of that, there's not really much going on through this session. So really just the PMIs are the ones that we'll sort of be looking out for in terms of data. So pretty quiet through the session today. So jump onto the charts. And as we see, DXY, it is respecting the chart. It did sort of take out the structural push up here, so it did find buyers pretty much exactly where we sort of said they would be. So just a little recap of it all. If we get onto a lower time frame, you can see we've got these internal little structures that have been, pushing up, break, pushing up, break. But we were still seeing this move up here with the buyers. So what we've sort of seen here is basically, it came back down here, tested, we covered this a couple of times and said, look, this is where it needs to hold. It needs to hold this 100 level. If it doesn't, well, where are the buyers? The buyers are back here. This is the major step up, as you can see, moving up through here. And they've come in where they need to, or people have taken profit, whichever, whatever. Market, the price has kind of stabilized where it kind of needed to. Now, the question with this is, can it use this as a platform to push back up? So, it's broken the initial structure. It found resistance where we kind of thought it would. I mean, this larger sort of falling resistance up the top over here. And, it's had a couple of attempts and it's failed, come back down like this. I think this is your death line now. I mean, what we sort of found here is obviously the structure's been building up. You've got one warning shot. You've come back down here. You need to find some sort of reason to be buying US dollar here. If this continues to dribble back down here, really you're coming back down to 97, and that's your big test down here, because underneath 97, well, that's it, and it looks pretty bad. Because if you look at this in terms of an overall kind of move, we've already got the fibs up here. Yep. So drag this back here to get it proper. Give or take it. Actually, I'm going to go for this one because it's the start of that trend. Update this down here. It didn't even get up to the 38%. And as we know, with the fibs, this sell down here, bounce. If you sort of under 38 is quite a strong continuation move, and you've got a high likelihood that it's going to come back down here. That's fine. You know what I mean? That we can work with that. If it breaks the lows, well, the cycle resets, and we know pretty much where we're going, probably around that sort of 95 area. Obviously not happening in one session, but the whole sort of thing. But the whole sort of structural sort of idea of things here is that three sort of push. So we've got our move down, we've found support, we move up, we find resistance, we're in this leg here now. So it doesn't mean that the game's over for US dollar. You're in the either high or low, double bottom, continuation. They're your three options through here, whether they decide to buy it or not. If we do find some support here, at a previous area where we found support, as covered a second ago, and we do find a little bit of a rally here, then the emphasis is then put on these highs. So as I said, this is why it's not down and out. Once it breaks through the lows down here, well, then you're kind of down and out, because that sort of resets the cycle. Support, resistance, boom, and you're playing in this zone down here. But for the time being, we are in this top area over here, so we don't need to worry about this till we take out the lows. This area through here, though, let's clear this up a little bit more. Actually, let's jump onto this other chart, because, as I said, I don't do the whole Elliott wave kind of stuff, but I did put a chart up a while ago, and it does seem to be playing out pretty much as I kind of sort of thought it would. So this is basically, your wave countdown. We've got the 5 up here, A, B, C, whatever, and then you got your 1, 2, 3, 4, 5 down here. Now this would be your sort of corrective area, and whereas this is sort of, it's obviously sort of coming back over here. This would be your A, this would be your B, and now we got your C. So C can either sort of be, I mean, somebody can probably correct me on this, but this can either be the wave 1 of something that moves back up, like we saw over here, A, B, C, and then C became the 1. So C becoming here would be your sort of wave. I guess this would be, I don't know, start the new structure anyway. Point is, it coming back down over here, it's broken this channel, retesting the top side of it, which is fine. We know structurally that's how a channel will work. It won't, very rarely will it break a channel and just run. It generally wants to come back lower than the breakout level, stop out all those early positions. Everybody that thought you were going, that's great. They've got position. Okay, blow them out. Nobody knows what's going on. Okay, fine. And then we can sort of run on. RSI, It's coming out of oversold. I would have liked this to have opened up a little bit more. The week's not over. This is on a weekly chart, which is obviously a higher time frame than I typically use. But you would want this to open up a little bit more. But as you can see, structurally, it's testing the top side of this channel. RSI is open to the idea of opening up. If this thing can sort of over the next week or so come back and sort of like hold this level and then sort of push through the highs there, then we're going to see the larger move play out to the top side over here. At the moment, it's in a little bit of a question mark. Like, of course, yes, it can still come down, but if you look at this as a structural move and you've got your channel and backtesting the top side, it just needs to hold this area here. If it comes back down, particularly if we close the week, like, you know, below this zone here, whoops, if we close the week below, give it a bit of space, a bit of breathing area, but if you close the week below 98.8, so this becomes like a big sort of fat yellow candle, I would say that's confirmation we're moving down lower. And this is going to be a failed breakout. But if you can sort of hold this level here, and you know, higher the better, obviously, a bit of a push back up. But if you can hold this level here, it still keeps it in the realm of, as I said a second ago, support, resistance, higher low. And if it holds this area through here, because that's technically your low down there, well, a higher low puts the emphasis back on these highs to start the cycle back up the other way. And that's what you look for. Do you get a double top through here, or do you break through and then have the cycle continue back up this way? That's my idea. Look, I do think overall, you know, we probably are going to sort of see these sort of mid 90s. But again, this is the idea that I'm sort of planning for. The idea that potentially this will get a breakout of this channel. We'll see some continued US dollar buying through the next couple of weeks. And then, so just get some messages come through. And then we see it sort of start to sort of ease out and then sort of come back down. But anyway, that's the sort of forward planning kind of thing. What we can do is work with what we've got today and put that onto the lower time frame. Let me just close this in here. So if we put this on to, whoops, why is this still coming out? So as you can see, it sort of came down. Buyers stepped in pretty much more or less where we were. It wasn't sort of an exact science of it all, but you know, on a high, this is on the 1 hour, but put it at least on the 4 hour, you can see through this zone here. This is where the buyers were sitting. Again, they've come in. They've saved it where they need to. Put a little zone through here. Support, support, support. A little bit resistance. Okay, look, it's held all right. So look, what I'm sort of looking at short term through this session is obviously you need to sort of hold and stabilize this area here. You want to really sort of start to see a move back up. We've got a little bit of a channel sort of forming in this little downtrend we've seen the last couple of times. Really still back up above, you know, 100. You want to see it 102, 106 is even better. Back up over these highs over here. But first of all, you want to recapture this kind of zone here where the buyers were. So back up 102, then you're not too bad. Up above 102, you've got out of this channel, you've reclaimed this horizontal, and then you can probably sort of start to sort of play around with this area over here. US dollar needs some strong data. That's what it needs. It needs metals, or at least gold and that, to sort of calm down a little bit. It needs some strength and some confidence in the US dollar, and that'll sort of see some of the flows sort of come back in over there. But at the moment, we've seen equities got a bit of a slap overnight. We've seen US dollar obviously continually selling down from its little technical area up over here. You know, you need to see some sort of confidence back in it. So what I could sort of maybe try and drag out as a trade is first of all to get through this sort of falling resistance. So let's just put an alert on that one. We are sort of overbought here, as you can see. There are some 1, 2, 3, 4 kind of fives, six candles on the 4 hour that has really held this zone. So it's oversold. Sorry, it's pushing back up over here. There's a good chance. So let's just put an alert just above these ones here as well. It's better if it goes straight to the messages. and flipping 84. Let's put an idea for it there. But since you've got quite a few hours of the sellers trying to sort of push it down through here, you can see obviously the market's buying it up here. So what we want to sort of see is this buying to sort of somewhat continue, push back out of this channel, and then force some sort of move back up above 100. But you got to break these levels. So you got to flip your candles. You got to get out of the channel. There's a bit of work to be done before it does sort of get out of there. But for the time being, I would say this probably has at least a little bit of reprieve, even if it is just going to sort of stuff around in these lower levels. Move along, we've got gold. And gold sort of dragging itself up here. We had that big explosion the other day. Where was it? Just through this level here, where it sort of like did 50 bucks in 2 hours. After that, it's kind of like sort of, it's moving. I mean, it's still grinding higher. But again, this buying is very different to the buying that we've seen in the other ones, these ones here. You know what I mean? Like these just kind of kept going. Yeah, there's little lulls and that, but it was really just, if you got onto the lower time frames and watch these things, it was just going up and up and up. This to me is sort of, I don't know, it's petering out a little bit. Say a little bit of a wedge sort of forming up to the top over here. Realistically, I think under 80, I had it marked out on the other chart. That's the area I'd like to get underneath to sort of see some sort of further cooling. We do have just a top side here. If we do decide to sort of pop up a little bit, a bit of a confluence of this horizontal of these previous highs, and also we have the falling resistance. I think we just closed the gap as well from the other day. So that's your gap closed here, which I mentioned yesterday. So yeah, as I said, it's grinding into this thing. It's closed that gap, and yeah, we'll sort of see how this goes. I feel like it's kind of running out of steam. Like everybody wants, well, not everybody, but like a lot of people want to see gold. Oh, it's going to 37, 4,000. And look, it probably will. But I do think we have a little bit of downside before we get there. It's almost time to clean this chart up. It's looking a bit scrappy. But for the time being, at least sort of through this area here, it is looking a little bit quiet. Yesterday was interesting because I was saying 11 o'clock is the time that you get the buying. And yeah, as I said, you can pick out which candle it was straight away. We saw it open up and then went up because everyone's like, yeah, 11 o'clock, we're buying it. This Asia session's buying hour. And they smacked straight into it. And as you can see, it slowly grinded up through the day, but then sort of smacked back down and grinded up. So it's not a massive confidence of, okay, they're going crazy. Again, see what happens at 11 o'clock today. Structurally, not even structurally, just sort of like from a sort of technical point. Look, it's 4 hour, I've got to say. It's overbought on the 4 hour. I think it's running on fumes. It's closed that gap now. If we do get a push up, maybe up to 65, again, that's where I'd like to sort of short it from if I get the option. Never really got that back test, retest up here. I think more just this little sort of rising wedge might be sort of a bit more of an indicator. But underneath 80 is where I'm sort of looking for. Yeah, underneath 80, 82, that kind of area. And I think we could see a little bit more of a sort of a cooling from this move. Move this down here. Yeah, so it's setting up around the sort of the 61% of this move down. What does this other one relate to? Oh, I already got it on there. It's a problem with too many things on the chart. You lose what's lined up with what. So yeah, it's back up around that 61%. Close the gap into a wedge. I think it might even just sort of come back down and sort of find a little range, consolidate around here. As I said, I think US dollar needs to be buying. That needs to look like a viable option. If that becomes a viable option, I think that'll be what sort of really gets gold back down to these lower levels. At the moment, it sort of, as I covered yesterday, kind of it caught a lot of people off guard, probably squeezed. Well, sorry, no, not squeeze. It sort of like sort of hit some stops down here, squeezed a few people out. Sorry, squeezed a few people out, dragged in some shorts. Now it's squeezing them out to the top side here. But to me, it looks like it's petering out a bit. Move on to Aussie, because this one is just a headache and a half. Yesterday we were about this level here, and I thought, look, we might sort of come back up, undo that move up to mid 40s. It actually went right back up here to this higher zone that we had sort of from that little 3 drive support back mid last week. So sellers came back in on Q, knocked it back down. Again, you want to sort of get back down underneath 24. Then you're looking at the sort of round number into the 90s, really. But more or less, this is just becoming its little range for now. I think above here, obviously, you've got headaches at sort of the round number 65. I think the danger's more if you come out the bottom side. I think there's a lot more room to move should you come out the bottom side. I think as soon as you come out the top here, you're going to run into sort of resistance again pretty quickly. And as I said, like with DXY sort of being so incredibly weak, which is basically, I know Aussie's not part of DXY, but it's a barometer of US dollar buying and strength across the market. Even though that's sort of absolutely on its knees, Aussie is, 64 and a half. I mean, we should see 60, Aussie should be at 67, realistically. Um, so as I said, the only thing that's keeping Aussie from being at 62 is the fact that US dollar is so weak. But if we saw US dollar so incredibly weak and people had confidence and the market was moving in that regard, like they were sort of selling US dollar because of a, because of a sort of a risk on and, no fear kind of thing, Aussie would be at 67. But, we're not seeing that. And the only reason it's not at 62 is because when it's matched up against the US dollar, well, it's staying afloat because US dollar is so weak. So it means if US dollar does catch a bid, Aussie's going to get crushed. I think there's more chance of US dollar catching a bid than there is of the risk sentiment across the market in shifting in sort of overnight, and then Aussie sort of cashing the bid and going up to the top side there. China back into a flat call. Look, it's trying to get back in its range, but it's not really doing anything. US dollar, I mean, it's on its knees, so it's almost moving up here. But again, I think it's the handbrake on the Aussie, and RBA is still, as I said, pushing it down. So for me, it's not necessarily a buy at this stage. I think we're probably more sort of tipping to the downside there. But I think sort of realistically, outside this little box moving up, you may be looking at 65 and then find some sellers again. I think down the bottom side here, yeah, you've got a couple of sort of horizontals here. As I said yesterday, that's kind of still the plan. Maybe a move down to sort of, 50s. I don't think it'll be a straight shot down, but I do think there's more risk for the downside here. It's had so many chances to move up. It does find buyers very strongly. But as I said, I think sort of if we do see US dollar catch a bid, I think Aussie's going to be the biggest one that gets smacked against the rest of the market. Because if you look at other things like euro against the US dollar, euro is pumping at its highs. It's a viable option. If it turns around, fine, it can come back. It can come back, just come down off its highs. And Aussie's on its highs of the bounce, but all in all, it's still at the bottom of its trend. If you look at if you zoom out a little bit further. So I think more risk is to the downside. I think sort of through the session though, underneath 23, targeting 6,400 supports, 63.90, 6,400. See how this one sort of plays out. Tick along, we got silver. Silver's, again, look, I put this one on the back burner. I caught a couple of good shorts through these moments here, and I was like, this is absolutely doing a head in. It's broken a couple of falling resistance here, like this little triangle that I had set up. It's broken obviously through there. This larger sort of falling resistance broken through there. Horizontals broken through there. It's in the zone where, I mean, it's going to run into all this kind of garbage over here a little bit more. But the point is, if it can push back up above here, if it holds above, say, 33.70, then, whoops, yes, you might sort of fall into, you might sort of run into a bunch of sort of resistances, and that's all this kind of stuff over here with this chop. Most likely you're going to see some chop over here as well, but it means that you'll be playing with this area. And I think that's important for silver. Like I've been on the sideline for silver for a little bit, mainly sort of all through this period here. A couple of times I've caught shorts down here. I've actually done okay in and out, but as I've said a couple of times, pretty much every day, this has been an absolute headache and a half. This is, my Aussie. Aussie's been a headache and a half for me. I haven't been trading in silver, but the point is, it's just you can't catch a break with anything. Selling up here, buying down here, that's fine. It's now breaking out of this little zone. This is where it could be potentially going to play around in. So if you sort of break above these highs over here, you're not necessarily going to get the major breakout above 65 because there's a lot of chop up over here. So we're going to see a lot of chop up over here as well. But the thing is then, because this has been quite a strong support, resistance kind of thing, sellers tried to drag it down. If you push back up over here, you're going to find this turning into quite a strong level of support. Yeah, yeah, yeah. And that's kind of the zone that you're going to be playing in, which, in theory is a risk on kind of a setup in that, but it's got to get there first. So we're up into an area where we know sellers love to sell it from. So it needs to prove itself to push back up into this zone. But should it close up around here, close up towards sort of 34, 33.80 to 34, then you could start to look at this as your range and start to trade from there. From then, let it drift up to the top and then sell it down from 34. That'd be the plan, but for me anyway. Copper, still in its little tight range. It's a range inside a range. As I said, the same with silver. I've just been sort of sitting on the sideline with this. It's copper's not really one that I sort of like to sort of trade intraday. If we get these big sort of trends going, then definitely, we can get some good moves. I caught this move down here. I got chopped up a little bit through here, made a little bit through here, and I just haven't traded it since. It's just been, back and forth. But again, you put all these things together, like, copper is quite a sort of risk associated asset. If the whole market was going risk on, so they were selling US dollar down because everyone's risk on. If that was the driver for it, copper should be up here, but they're not. So it kind of makes me think that it's more just sort of like, they want to dump US dollar at any costs. It's not, you got to look at the reason for why they're selling the US dollar. They're not selling it because they're shifting to risk on. They're just moving away from the US dollar. So it kind of muddies the water when you're trying to look at, is the market risk on or risk off? I mean, we're seeing equity markets pumping along. I think that's running out of steam as well. And I think that the market's not necessarily going, hey, risk on. I think sort of this is a good indicator. If we get a break above here, then okay, yes, you can run with that. You can see Aussie break out probably as well. But till that happens, this is sideways. Silver for the most part's been sideways. Aussie's sideways. It's just not doing anything. And this is very tight through here. So again, 4.8, 4.5, still they're the main levels. I think any sell down here would be bought up. I think you run into a resistance even if you pop out the top side of this little sort of consolidation period here. But yeah, we'll see what the market decides to do. I think, as I said, I think we're probably going to see that little flip and at least rally attempt in US dollar. I'm watching for it to come out of that channel. If it does, then I think we could probably see a little bit of a cooling on a couple of these more risk associated assets. Because if they're not buying it, even while the US dollar is being sold off, what happens when they do buy the US dollar? Well, it's going to be hit twice as hard because they're already not buying it. So we'll see how this one goes. Gold, silver, blah, blah, blah. And then I guess, yeah, but lastly, of course, just with China, which is just petering along down the bottom over here. Nothing really of note with these guys here. Zoom out a little bit. You can see that really it's trying to get up and then it fails. It's just, I mean, I think certainly a close down underneath sort of a 717, this might be the time that you see those things break as well. You know what I mean? If we see strength in the yuan to push it down underneath this level, then you might see a little bit of a reprieve in Aussie. But I still think the risk is more to the upside, though you're running into a lot of heads of resistance. And this is why the market's so tough to read at the moment, because nothing's clear cut. Everything's just in a sort of a wait and see sort of attitude. So I think the big driver, the big thing I'm looking for is when DXY either rallies, breaks that 102 level, or breaks down and goes down underneath 97. I think once that happens, then we're going to start to see some trends form. But as I said, I'm still looking for a recovery of the US dollar. All right, that's it from me.